very warm welcome. You're watching Your Trades on ET Now. This is Priyanka Uppal along with me, Snehi. A choppy day, we must say, for the indices. However, there were some sectors which were managing the index well. But then finally, Nifty closed 80 odd points lower from the day's high. Indices opened lower, however, but then initial dip was bought also. But then many sectors which saw profit taking today. Clearly, consumption side of the stocks, FMCG, auto, pharma. To name some stocks were like Nestle, Dr. Reddy's, Cipla. Of course, there were some broking house reports which rated on the stocks. Nestle stocks was down, was the top loser because MK initiated a coverage with a reduced recommendation. That's what weighed on the stock. Slight profit booking was seen in the sectors which were running high, like real estate space, which was the index was down by more than 2.5%. Little sluggish move we saw in steel-specific stocks, but then the other side of the metal stocks were doing well. Aluminium, zinc stocks, they were doing pretty well today. IT and the banks, and especially the large cap bank names, plus some of the PSU names, they were managing the index very well. IT stocks, because of course there was a CLS safe which gave higher targets for many of the large cap stocks. This was one reason that IT stocks also were higher on the trade today. PSU, financials, metals to some extent, pockets like zinc, aluminium, they were doing well. Energy sector lent support today. Broader markets, if we talk about, advance and decline ratio was pretty steady for the third consecutive straight day. And the new specific action was, of course, weighing on the specific stocks. JSW Energy, QIP News stock was 7% up. Poonawalla, PNB, some of the other names from banking and financials from the broader market. Aluminium and zinc stock. Discount org was over to the moon with 11% of the gain, and some profit taking we saw in FMCG, auto, consumption pockets majorly, and because of a lot of broking house reports also. But then another story which we tracked today was IT stocks, because there were some targets upgrades by CLS. And if you remember, Snehi, 2 days back only Morgan Stanley has also given an overbought rating on a lot of large cap IT names, and hence, so looks like a similar trend coming in from the IT series. But then of course, needs to be watched out from the earning pack. But then certainly a good trade from IT stocks today.
Well, absolutely very good trading session coming in from the IT stocks, especially Coforge was up almost 2%, TCS up 1.6%, Tech Mahindra also up 1.6%, and the other mid-cap IT names also like Mphasis. And Mphasis also did pretty well. However, Persistent and Infosys ended the day in the red. So, well, that's what happened on the IT front. But moving on then, let's also talk about some other newsmakers of the day. And it has to be JSW Energy, because that company has gone ahead and announced its QIP worth 5,000 crores. And the floor price is set at 510 rupees. Vodafone Idea was the next in focus. Now that stock surged 2%, but fizzled out those gains, but still ended the day with a 1% uptick after the shareholders have approved and given a nod for a fundraise of 20,000 crore rupees, which could potentially unlock revenue opportunities for multinational telecom gear vendors such as Nokia and Ericsson as well. And lastly then, Bharti Airtel, that Hexacom IPO has opened today. Bharti Hexacom IPO opened today for subscription, will stay open till the 5th of April. Remember, price band is between 542 and 570 rupees. Bharti Airtel owns 70% of this company, while the government of India owns the remaining 30%, and this company has a potential market cap of 28,500 crore rupees. So, well, largely this is what the market looked like. But to understand more about what we can expect from the markets going ahead, Vetri Subramaniam, the Chief Investment Officer at UTI AMC, he shared with us his views on large caps. He believes that the valuation in large caps continue to be punchy, but there is no margin of safety in mid and small caps either. So let's listen in to his views.
If you look at the large caps, the valuations are punchy, but I'd still say they're not sort of blinking red. But the mid cap and small cap segment of the market, I would say the valuations there still give us cause for concern. There is really no margin of safety over there. They are in fact trading at a premium to the large caps, which is not something I have typically experienced, in my 30-year career. The mid caps sometimes do trade at a premium to large caps, but very unusual for small caps in aggregate to trade at a premium, which they are, which is why, to my mind, the valuation comfort there, they've corrected a little bit more from the top as compared to the large caps, but still no margin of comfort, so to speak.
All right, so that's a view coming in. But then crude seems to be inching higher, and another In fact, it's at the highest level since November month, and crude prices are on a tear with prices near 5 months high. Let's get into speak to Somit to tell us what's driving this surge and how it can impact the UMCs.
Well, if you see Brent crude, we're trading around. Brent crude was trading around $89 per barrel level, which is the highest that we have seen since October 30th, 2023. In fact, from 2024 lows, Brent crude prices have surged nearly 19% and is just 1% away from being in a bull market on a technical basis that we speak about. Now, why have we seen this rise in the crude oil prices? Firstly, is the fresh supply threats that are coming in owing to the escalating conflicts in the Middle East nation. Along with this, the Ukrainian drones had also attacked the major Russian oil refinery, which also put supply issues in point, and that's the reason why we are seeing such kind of a rally when it comes to Brent crude prices. Now, what would be the impact on the Indian companies? Well, it will be majorly negative for the Indian oil marketing companies, given the fact that recently they had taken a cut in retail fuel prices, which had lowered their marketing margins, and given the fact that crude oil prices are now rising, the marketing margins would be further under pressure going forward. Now, what we understand is that the marketing on petrol earlier were around 7.4 rupees per litre, and now they are below 3 rupees per litre. In fact, on diesel it was at around 3.4 rupees per litre earlier, and now it might be negative as per analysts. Now, and also with every 0.5 rupees per litre drop in this marketing margin, the EBITDA of Indian Oil Corporation, HPCL and BPCL comes down by around 7 to 11%. Other than this, the gross refining margins have also been on a declining trend from $8.7 per barrel peak that we had seen in January. It has come down to $4.2 per barrel, and this also impacts OMC's EPS by around 14 to 16%. So keep an eye out for oil marketing companies in trade.
Alright, well, Swami, thanks so much for taking us through that. But moving on, let's get in the expert perspective on our show now. And Ruchit Jain, the lead researcher at 5paisa.com, is joining us. Hi, Ruchit. Thanks so much for taking the time out and joining us. Help us understand this move that we've been seeing in the market over the last 3 days, or you can say at the start of the new financial year. The markets have consistently outperformed the benchmarks, and yesterday also and today. So I'm very surprised to see that the small cap index is the one that's leading the gains, especially after the kind of performance we did see coming in the SMID basket in the last month itself. Do you think this reversal trend is here to stay? Is it sustainable going ahead? Do you think there is exuberance back in the broader markets? Help us understand this move.
Yeah, hi, very good afternoon. Well, if we look towards the end of the March, on 20th March, we witnessed a new high getting registered on the Nifty of 22,530. But somewhere the small cap and the mid caps were still away from their previous all-time high. So I think that's what led to this buying interest more in the mid cap and the small caps stocks. And been witnessing that outperformance. But nonetheless, the broader trend for the market still continues to remain on the positive side. I think it just said the short-term momentum readings were a bit overbought post that 3-4 days of sharp up move, and hence we have been consolidating on the index since last 3-4 trading sessions. But the important supports are still intact. Today we witnessed that in spite of that negativity at the opening based on the global cues, we did not see any kind of follow-up selling. And market breadth is the main indicator which helps us to see that how the momentum could go continue going ahead. So I think 22,300 to 250 remains a very crucial support zone for the index. Till that is intact, the trend remains positive, and it's just 2 or 3 days of consolidation or a time correction that we have been witnessing on the index. But once that 22,530 gets surpassed, I think markets would be geared to make new highs towards 22,700 to 750 quite soon.
So, this means that 22,500 seems to be a resistance zone, and once we cross the zone, then only we see an upside rally. But then, which can be the potential stock that one can ride on?
A couple of recommendations. One is I have first call from the PSU banking space. Today we witnessed quite a good move in many of the stocks in the last 1.5 to 2 hours. We witnessed very good price volume action in PSU names. So I think SBI could move higher from current levels, although we are positive on the entire basket. But SBI, I think being a leader, the recent correction did not see any kind of volume-based sell-off. And slowly and gradually, the stock could move higher towards 800 kind of levels. So short-term traders can look for buying opportunities in SBI with stop loss below 767 for potential target of 800 to 805. And within the mid-cap space, Tata Elxsi is one stock which is looking quite interesting. Selective IT stocks witness a good momentum today after a long period of time, and Tata Elxsi has been consolidating within the range since last 3 to 4 months. A good price volume breakout has been seen today, where if you look at today's volume compared to average of last few weeks, then it was one of the highest volumes and off late. So I think price up move supported by good volume, consolidation breakout augurs well for Tata Elxsi for the near term. Short term traders can go long with stop below 1750 for potential targets of 8370.
Right, Ruchit, thanks so much for joining us, sharing with us your market outlook as well as your picks. With that, we'll let you go.
Look, what is the data suggesting on the derivative side also? What we saw was a resistance and what Richard was also mentioning, and hence the trend looks like for Bank Nifty, it is flattish. For Nifty, it is mildly short built up, what we can see. And in fact, the resistance certainly is appearing to be, and hence Richard also mentioned once we cross 22,500, we can see a leg up. And call writing was the maximum open interest which was there on call writing side was 22,500, 20,600. So this seems to be a resistance zone. And where do we have a support? Because there's a put writing on 22,300, 22,400. So looks like a range bound trade up till we do not cross this level. Snehi?
Well, all right, let's get a move on then and talk about the big story of the day, or you could say the big stocks of the day. And we don't have one, but we have two stocks today which were on our radar, which were a bust today. They were all cargo, logistics as well as Tata Tech. Both of these stocks did phenomenally well in today's trading session, closing the day with gains of 4% each. Now, we managed to speak to the managements of both of these companies today. Ravi Jakar, Chief Strategy Officer at All Cargo Logistics, and Tata Tech CEO and MD Warren Harris. Let's go across and listen in to their insights on margin and growth prospects for their companies individually. Listen
in the previous quarter, we saw margins actually improve in the international business for us. And now in the coming quarters, we believe both trends should continue. We have been optimizing the cost side, both by use of technology as well as restructuring. And we have also been witnessing volume growth, and expansion in margin should also be led by a better utilization of containers on the international supply chain side. So overall, sequentially, steadily, we expect that the financial performance should continue to improve.
We've been working on this partnership for the best part of 12 months, and certainly over the last 6 months, we've been putting together a lot of detail. I think the fact that we've announced really formalizes the exercise of readiness that both organizations will undertake. We expect regulatory approval to be secured in the next 3 or 4 months, and we certainly expect to capitalize upon her experience and know-how as we build out the Tata Technology organization, and we look to replicate in many respects in our sector what TCS has done in the IT market. Well, this business is driven by large deals, so we consistently look to not only respond to customer requirements in and around large deals, but we're also looking to shape proactively large deals that we can, or large propositions that we can take to our customers.
All right, that's the word coming in from the management of the buzzing stocks today. But then let's step back and look at more stocks which were buzzing in trade today, which were in news. And Gaurav joins in to give us more insights. Gaurav, tell us what your list looks like.
Right. Inox India is first company which is in focus today because company recently received patent rights, and this is related to the store of cryogenic fluid tanks. If you look at the company's profile, almost it is actually the largest exporter of cryogenic tanks from India, and on back of this news we saw the stock was up almost 4% in today's trade. Let's also talk about Tata Motors, because recently China has relaxed loan ratio for vehicle purchases, and almost 14 to 16% of the sales for Tata Motors comes from China. And on back of this news we saw a positive trend coming up in this as well. Talking about NLC India now, because as per sources, company is going to sell renewable assets worth 6,000 crore rupees, which is going to be positive for the company, and that is why we will definitely keep an eye on NLC India as well. Bharti Airtel is another stock in focus because recently Bharti Hexacom came the IPO, where we saw 40% of the proportion subscribed via retail subscription, and almost 30% of the overall value which was offered for sale was subscribed in day one itself, and Bharti Airtel owns 70% of the company. Although the Bharti Airtel is not going to sell any stake, but this will lead to value discovery for the company, and on back of this we saw positive trend in Bharti Airtel's share price as well. And lastly, let's talk about oil producing company, because as per sources, government is likely to hike windfall taxes, because seen rally in the crude prices. And if we talk about Reliance and ONGC, this could be a negative news for these companies. So all in all, we will definitely keep an eye on all these companies on the back of the news flow that we just discussed and see how they perform for investors in the coming days.
All right, Gaurav, thanks so much for taking us through that. But another sector or another basket of stocks that was abuzz and how in today's trading session was the chemical pack. Now, channel checks suggest that chemicals have seen some price changes on a month-on-month basis. So what is going to be the impact of this on the chemical stocks? My colleague Sharad is joining in with all of those details. Sharad, take it away.
Important updates coming from the chemical space, especially on the pricing checks for the month of March. We have seen for acetic acid, it's down almost 5% on a month-on-month basis, but this is negative for GNFC, while on the positive for Lakshmi Organics or Jubilant Ingrevia. Also, caustic soda, the prices have increased by more than 10%, almost 13% coming in, but it's negative for companies such as Deepak Nitrite, GNFC, JSFC, while positive for Grasim and DCM Shriram. Soda ash, important component, that's down almost 13% on a month-on-month basis. And it's negative for Tata Chemicals, but the India prices are actually, if you look at it, disconnected with China. Phenol and acetone is also down, which is negative for Deepak Nitrite, while palm kernel oil, that's up almost 17%. This is actually negative coming for Galaxy Surfactants, while Fluorspar, if you look at it, that has increased and is positive for Navin Fluorine, SRF, and even Gujarat Fluoro. TDI, which is the toluene spread, that has contracted almost 13% on a month-on-month basis, and it's negative for GNFC, while the benzene caprolactam spread, that has actually come down almost 25%, and that's a large amount, and this is negative coming in GSFC. Lastly, ethyl acetate or the acetic acid with the ethanol spread, that has contracted 35% on a month-on-month basis. Large contractions happening, and it's negative for GNFC, Jubilant and Lakshmi Organics. So these are the important chemical stock movements in the prices and their impacts on the respective companies.
Very much, Sharad, for the insights on the dire space. Let's go ahead. And now that electronic insurance policies have also become mandatory, what do this mean? Who it will benefit and what will it entail? Anurag Shah joins in with an explanation. Anurag.
So recently, insurance regulator IRDA has come up with a policyholders protection regulation, and in which it's mandated to all insurance companies that a new insurance policy will give a option to policyholder to have a e-insurance account. So insurance regulatory, so presently there are 4 insurance regulatory repositories are in the country. CAMS Insurance Repository, Carvi Insurance Repository, CDSL Insurance Repository and NSDL Insurance Repository. So these are the 4 companies will get benefited. The mandate given by IRDA to have a policy to issued in a electronic form. So whenever a new policy, a policyholder is going to or to renew a insurance policy, there will be an option to open a insurance account, electronic insurance account. So that will be a form of a demat account only. So once the insurance electronic account gets open, all your policies, it's a life insurance policy or a health insurance policy or property policy, motor insurance policy, all will be there at one place only, and there cannot be 2 insurance account. There can be only one insurance account only with these 4 repositories. So this is a very major change has happened in the insurance space, and IRD has mandated from 1st of April. So on an average, every year there are 50 crore general insurance policies get issued. So for all these policies, these companies will be supposed to give a option to the customer to open a EIA account as an electronic insurance account. And for renewal also, there will be option to customers to open an electronic insurance account. Similarly, around 3 crore life insurance policies are also every year getting sold. So for these policies also, electronic insurance account option will be given to policyholder, and the one place will be there, just like a demat account for shares. Insurance, electronic insurance will be a demat. Your insurance policy will be in a demat form, and for the insurance companies also it will be beneficial. They will not be mandatory for them to give a physical copy. Although if policyholder asks a physical copy, insurance company is bound to give the physical copy, but the cost of printing of a policy they can save. Other than that, for the unclaimed amount, unclaimed policyholders amount, that can be reduced after the e-insurance account in a demat form.
Well, all right, Anurag, thanks so much for all of those details on Insurance. Well, in other news, the Indian rupee has ended at a record closing low of 83.435 against the greenback. But MPC's first meeting of FY25 has kicked off, and the street is expecting the central bank to maintain status quo. Let's go across to Gaurav to tell us what to expect and what we can be watching for in terms of this MPC. That's the first Monetary Policy Committee meeting of FY25. Let's listen in.
Talking about Monetary Policy Committee's meeting, RBI has kept its focus on three main factors. And first, if we talk about growth, we have already seen a surprise which came up in the quarter gone by. And if we talk about the high frequency data in this quarter also, it shows rebound in the consumption activities, which means that street is expecting the growth to remain robust in this quarter also. If we talk about inflation now, RBI may reiterate its stance on bringing inflation back to 4% levels. But if we look at inflation in the Jan and February so far, it was at 5.1%, and now street is expecting headline inflation to remain above 5% in first half of CY24 also, and this will be because of the high food inflation, which will be a key monitorable for the committee going ahead. If we talk about liquidity also, now we have seen interbank liquidity turning into a surplus in the month of March, whereas it was in the deficit since September 23, and we may see short-term volatility in this sector as well. And on back of all these factors, now street is expecting RBI to remain steady on the policy. They're expecting status quo on rates. That means the rates are expected to remain 6.5%. They expect RBI's stance to remain at withdrawal of accommodation from here on as well, and we may see 2 rate cuts in the year itself in 2024, and first rate cut may start in August 24 as per street's expectation. Obviously, there are some risks. For example, global factors and domestic factors will affect these entire rate cut scenario. But all in all, we will definitely keep an eye on how RBI sees these risks and how they go ahead with the rate cuts coming ahead.
All right, thanks very much, Gaurav. So, big cues coming in from MPC, but despite weak macro cues, we did not do that bad. High oil prices, bulls completely ignored that. But then one needs to watch is a lot of other economic data which will slip in today on from the US markets, in fact from UK markets. Let's see how do we react once we open tomorrow. Well, that's all in this edition of Your Trades. Thanks so much for watching. Stay tuned for more updates.